WeWork India is coming to the market with a 3,000 crore issue. No fresh issue, an offer for sale by the promoter Embassy Buildcon and WeWork International. Now this is India's largest flexible co-working space, present in 68 centres, 8 cities, with operational desks of more than 1 lakh. Joining me today in our show IPO KYC is Karan Virwani, CEO and MD. Thank you very much, Karan, for joining in. Big moment.
Yes, good morning and thanks for having me.
Okay. So there's no growth issue, no fresh issue, just an offer for sale. Why is that?
So, over the last 8 years, Rima, we've been through a huge journey of growing this industry, investing into it, and today gone to become the largest operator from, definitely a financial standpoint, from a revenue and now profitability standpoint. So in the last 3 years, especially since COVID, the business has become self-sustaining. We're actually generating positive free cash and a high EBITDA that is much more than we need for our capex expansion.
So what are your operational cash flows?
So as of last year, we ended at close to about a 22% EBITDA margin. This is a fully adjusted EBITDA. At a reported level, we're almost at about 63% EBITDA margins. And roughly about 420 crores of EBITDA on a revenue of close to about 2,000 crores is what we generated, which is, I think, the highest in the industry by far, and also enough for us to sustain a very consistent growth where we're able to deliver both bottom line growth as well as capacity growth.
Okay. So what are your expansion plans right now? You're present, you've got 68 centers, 1.14 lakh desks, 8 cities. What are the growth plans?
So if you look at the commercial real estate market in India itself, has been growing at roughly a clip of almost like 8%. Last year was the peak expansion for commercial real estate, almost 77 million square foot of commercial expansion. In the last 8 years, the flexible industry itself has become from zero, close to about 10%. And for incremental expansion, it's nearly 25%, which is now matching ITES. So the industry itself is growing at roughly about 18-20%. We are market leaders in the industry, so our endeavor is always going to be to grow slightly over and above that from a capacity and growth standpoint. We will continue to grow faster than the industry itself, at this scale, we think that that's roughly in the range of like 20,000 desks year over year. And if demand increases, like last year, we actually added almost 27,000 desks. So if demand continues to show that there is, the requirement, we'll even accelerate that growth.
Got that. So over the last 2-3 years, you've grown at an average of 20%.
Yeah. Will
that sustain? And is there scope to expand margins above 22%?
Yeah, we are operating at already 22% EBITDA as of FY25. FY24 was closer to 20.4%. So you already see a margin expansion, even in a year of extremely high growth. And we see that there is enough potential from the existing ramp-up centers maturing, which will lead to more margin expansion. We've also unlocked few revenue streams that are extremely high margin. Our digital products business, which is growing faster than our workspace business. Over and above that, our services business, which is higher. No, this is services that we sell over and above the workspace business. So it could be anything from F&B to parking to dedicated internet to customizing your workspace even further. This is at about 11 to 12% of our business, where the industry is roughly about 8%. So all this incremental revenue plus the mature buildings continuing to ramp up and the existing ramp-up centers, we think that there's at least 4 to 5 points of margin expansion still available in the business while growing.
Got that. So we'll come to the services business and how you can scale that up further from the current 11-12%. But you're also a premium offering. So on a like-to-like basis, how much higher would your rents be, say, in a grade A office space in Mumbai or Bangalore versus peers?
Our pricing is really a factor of where we take space more than anything else. You see that we have a huge building in the center of BKC. We're in the middle of Cyber City. We're in CBD Bangalore, in some of the best business parks like Embassy Golf Links, etc., which are always in high demand. So today our pricing averages close to about 20,000 odd rupees per desk. It's almost two or slightly higher than 2 times that of the competition.
The India growth stories in Bharat, the tier 2, tier 3 cities, and you're present only in 8, and you were just telling us the strategy is to go deeper in the micro markets.
Yeah.
So is that 8 cities, or are you planning to expand, and what would be the, say, 2 years, 3 years down the line? How many cities would you be present in?
So we are evaluating all cities. I don't think we look at anything as tier 1, tier 2, tier 3 in that sense. We actually are looking at where is there sustained demand that allows us to grow fast and have multiple centers, and where is there quality real estate.
As of now, in your plans, there is no expansion beyond 8 cities.
No city has given us that indication yet. If you just look at, Chennai, I'll take Chennai as an example. We only entered last year after 7 years, even though it is a top tier city. And that's really because Chennai's absorption went from 2-3 million square foot a year now to almost 9 million square foot. And in the last year itself, we've opened 3 locations. We've done an extremely large deal for, global tech business also over there. So we're seeing that the market is now ready for us. So yeah, I hope that WeWork is in all cities in India soon, and that's just how much runway we have left from now.
So tell us about WeWork Global.
Yeah.
They're not classified as a promoter. What is their stake, and how much will it come down post offer for sale?
So WeWork India started off as a first ever franchise location for WeWork in the world. At the start, Embassy owned about 100% of the business, and we invested all of our own capital in actually growing the business, for the first 5-6 years. It was only in 2020 that WeWork Global came in and actually, at a time where the company really required money, took that leap of faith and actually gave us about $100 million at that point in time, which allowed us to get through COVID and, get through all of those tough times. They are not a promoter. Embassy continues to be the clear promoter, and it will be for the sustainable future. So they own currently about 22%. Post the IPO, they'll be somewhere in the mid-teens. So roughly a 30% dilution on both sides of the business. And, for the brand, for the IP, we pay about a 2.5% management fee. That gives us exclusive rights to the brand in perpetuity in India.
So this management fee of 2.5%, which is paid annually, when does that come up for renewal?
It doesn't. It's a set fee that we have now in perpetuity.
Okay. Do you have any sort of an agreement with WeWork Global to buy their mid-teens kind of a stake? Is there any agreement between you two?
No, not at all.
Karan, so one of the profitability drivers is your services and digital business.
Yeah.
Services is 11-12%, digital is 4%. Can you scale that up higher to say 20-25%? If yes, by how much?
Yeah. So our core business, which is our workspace business, right, has evolved over the last few years from being a product just for startups and freelancers now, where we do really large scale spaces for some of the best global corporates. So these large managed office spaces where we do fully bespoke design, build and operate, source, design, build and operate. Over and above that is the services business, which is roughly about 11% right now. We see that growing extremely fast. It grows along with the workspace business. But as we will bring in other services that basically help you as a company eliminate all other inconveniences. So today we take care of things like your internet, to food, to doing events. When you do a town hall or an investor meet, we're able to actually do that entire curated for you. But over and above that, we feel like there are other potential services, transport, things that GCCs require in terms of services when they're actually growing in the country, or what startups actually require, when they're actually building out their businesses as well. So our endeavor will be to go deeper and try to move that incrementally upwards from a contribution standpoint. And then our digital business, which is roughly about 4% of the business today, 4% of revenue, but actually driving almost 20% of EBITDA. It's a highly profitable business. It's growing faster than the workspace business is. And so that contribution will slightly move up from, 3 to 4%, where it is now maybe, closer to 5-6%.
As reading the RHP, there are 500 flexible co-working space.
Yeah.
Are you planning to buy any?
Look, I don't, I won't say no, but it's a very long tail of operators. In the last 8 years since we started, 450, 500 operators have come about, which really shows you that the industry is now, evolved. There is value to customers. That's why people are willing to get into it, and people are making money as well. I think if we ever do look at that, being the largest scaled operator, we would need a few things to actually match, which is quality of product, quality of assets and tenants, something that we wouldn't be able to build ourselves.
Perfect. Thank you very much, Karan, for joining in. Great conversation. All the best.
Thank you so much. Thank you.